You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' music means it's time once again for the option block. Everyone's favorite. I know it's my favorite. Hopefully it's yours too. Bi-weekly source for all things options related. My name is Mark Longo, beaming to you from the options capital of the world here, sunny Chicago, and indeed our Options Insider Radio Network HQ, our studios where we produce a wide array of options-oriented content and a variety of media. Where can you find all that? Well, probably the best place. TheOptionsInsider.com's got all the written content as well as all of the on-demand radio stuff for you guys to enjoy. Just surf on over there, bookmark it, visit it on your device of choice. It's all there for you guys to enjoy. Some breaking news from the options market, some unusual activities, some edumacation, some strategery, all that fun stuff, and of course all the radio as well. So no shortage of fun stuff over there at the old site. And of course you can find our various other outings on most of the online stores where you find your favorite podcasts, iTunes, TuneIn, Stitcher, etc., etc. And, of course, via our mobile app available for iOS, Android, and, as many of you are now discovering, the Fire OS as well. So no shortage of ways for you guys. Check out our content, and then while you're listening, while you're reading, send us your questions, your comments, your feedback. We love to hear from you guys. And joining me on the old program today, starting off with the man who was almost too busy making it today because he was busy digging up his own ice skating rink. Yes, the problems of the hinterlands. You know him, you love him as the Rock Lobster, Mr. Andrew Giovinazzi, from many different dealings, including his new title of risk manager over there at Carmen Line Capital. Mr. Risk Manager, welcome to the program, sir.
I'm sorry, I'm just too busy for you today. I'm managing risk.
Yes, lots of risk, lots of downside risk today. You guys, all your put writing.
No, we don't do that.
I told you, selling teeny puts is going to come back to haunt you. I've told you that many times.
Strategery, exactly. Those little tiny puts are going to come back and hurt us.
Yes, but
I'm good, though.
And you are indeed digging a ice skating rink, so all sorts of fun happening out there.
Technically, the bulldozer is supposed to dig the ice rink. The area is ready. So I'm still knocking on wood. It's right now the delta is dropping to about 60. I might have to use one of the ponds, but c'est la vie. But I have backup.
And listeners, if you're out there in or near the hinterlands of Maine and you want to enjoy some private ice skating with the Rock Lobster himself, reach out to him. I'm sure he'll love to welcome you onto his private ice skating rink, and I'm sure his fees will be quite reasonable. And speaking of private leisure activities, we now turn our attention to Uncle Mike Tusaw, who just finished, or I think is in the process of building his own boat lift. All these guys and their exotic leisure activities. Of course, Uncle Mike joins us from RCM Wealth Advisors by way of that sleepy little hamlet known as St. Charles, Illinois. Uncle Mike, welcome to the program to you as well, sir.
Always happy to be here. And I'll even extend this out to the listeners. If you guys want to come to the Fox River, I will let you come onto the Fox River for 2/8 of a 10 lot minus the spread.
Wow, and by the time
I have no idea what the heck I just said.
By the time I figure out what that is, the ride is over. So there you go.
Oh, my gosh.
$70,000, listeners. A small price to pay to go boating with Uncle Mike Tusaw. All right, with the team assembled and spouting some confusing stuff, we're going to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block. This is indeed the portion of the old program where we break down what's lighting it up in the old markets today, and it's pretty much downside palooza across the board. We are recording this, of course, on Monday, November 9th. Hard to believe we're rolling on through November already, but c'est la vie. Monday, November 9th, for all of you out there playing the home game. And again, a lot of red on the old screen. Most of the major indices, like the S&P and others, off nearly a full percentage point or so. Of course, bouncing off the lows that we had seen intraday. The S&P hovering right now down about nearly 18 handles, right around 2081. It had dipped as low as about 2068 intraday there. So off those aggressive lows, shall we say, but still off nearly a full percentage point on the day. We'll see how all this shakes out here as the final few minutes wind down. Also, the down and the Qs off commensurately on the day as well. And all of this downside giving some love to the old VIX cash popping over the 16 handle here at the beginning of the week, right about 16.13 right now. So setting off the narrative we were debating on the vol views last week. Where would it go? Would it be north? Would it be south? Would it remain the same? A lot of people leaning for some slight movements in either direction, or pretty much unched. So far, it seems like slight upside is indeed winning the day, but we got a whole week ahead of us before we get to unwind that wager. So we'll turn our attention now. Let's go in order of proximity this time, starting farther away from the hinterlands, as he is fixing up his boat dock, winding it down for the year. He still has some time to keep an eye on the old markets. So, Uncle Mike Tusaw, what was catching your eye in today's activity, sir?
Yeah, what caught my eye is this seemed very broad-based, in that I'm not looking at it and saying, oh, it was financials or it was the energy or anything like that. This appeared to be very broad-based to me throughout the board and all the stocks and the underlyings with which I look at. I'm not really too concerned of this for the time being. I think this was an opportunity to where if you were a covered call seller to close out some covered calls, or if you're a put seller, which it sounds like Andrew may or may not be in his new position, it would be an opportunity to possibly sell some puts to get into the market if indeed you are a bull. The other thing that I want to point out is that we haven't really had too many down days over the course of the last 5 or 6 weeks. In the month of October, we had almost about a 10% run up in the S&P. So with that being said, I think a little bit of a pullback in the near term is healthy. The other thing that caught my eye was just the intraday movement with which we had yet again. We haven't been having quite as much of a gappy market like we had a couple months ago, meaning the market would either gap up or gap down a lot overnight. But we just sold off in a major way right from the open. And we did bottom out probably around the 2070 level, around that area on the SPX, the 207 level on SPY. We channeled for the rest of the day, and then going into the close, we had a pretty nice little rally in the last half hour of the day. So what caught my eye today is that this did appear to be very broad-based. Also, what caught my eye was just the intraday movement, and I'm actually excited to be looking at my phone and checking the quotes on the futures probably around 9, 10 o'clock at night, just to see what kind of an aftermarket we do get tonight after a day like today.
Yeah, it was a bit of a weird one because you're right. We had the non-farms already coming out on Friday, and we saw that effect play out on Friday, and then it seems like the market took the weekend to kind of digest that information, and then they came out this morning and said, it's almost much more of a done deal than perhaps we even thought with the old rate hike, and then they kind of just proceeded to slam everything across the board until maybe calmer heads prevailed towards the latter end of the session and rallying a bit off those lows. But you're right, it seems like the weekend, if anything, exacerbated some of the fears about the Fed, and now resulting in this aggressive sell-off that we saw going here today. A bit of a weird one today. Mr. Rock Lobster, in addition to digging your holes out there and getting ready for some ice out there in Maine, what else caught your eye in today's activity?
Didn't Russell and I predict volatility? Some of my chat room guys were reminding me of it. I think he said he wanted it slightly up and slightly down. And I think 1 week to the day, or 1 week from, I think it was dead flat, the vol. So both of us were And now we got a little lift today.
I'm sorry, the week you were on vol views, I think you went up and he went up and you went down, or vice versa. And so I, being ever the good host, try to make some good content, split the uprights. And that was indeed the salient choice of the week. It was almost exactly unched. And then this week I forgot who went up and down, if it was Mark or Russell. We'll have to go look, or indeed our guest, Kurt from Live Vol. But, yeah, so it was interesting. I think most of us kind of leaned. I think Mark and I leaned on more of the relatively unchanged. And we still got a few days left in the old week before we see this play out. But in addition to our vol views wagers, which are just faux wagers, we never really change hands. We should put some money on these things. Might make them a little more interesting. But that said, what else caught your eye today, sir?
People would try harder, probably. Although I did try pretty hard. I ended up having to close some puts that I bought for like a small loss. I had some drawdown, or we had some beat down in VIX last week, but by today, obviously it was all gone. So I kind of got back to where I started, essentially, which was it's sort of like kissing your sister. Not very fun.
Hey, whatever you guys do in Maine is your own business.
It's a big nothing. So I think that 16 handle for the December future is going to prove to be a very difficult thing, as long as the Fed keeps, doing whatever they're doing, driving everybody crazy. That's what I see. So all the products that are derived off that December future, and until the Fed makes up its mind, I think we're going to see more days like today. We saw them back and forth last week into some of these numbers. It does seem like the market wants to rally, but I think a lot, especially big tech with the Qs, I think reaching an all-time high last week. That kind of went unheralded. I think the NASDAQ hit an all-time high last week. I know at least the Qs did. So that's amazing in and of itself. So we quietly, after just getting smoked out in, August, September, the Qs somehow made an all-time high again, very quietly. So I think there was some pushback on that. And for the most part, I think we're going to wash around a lot. I think the 16 handle for December is going to be tough to get through and stay sustained in any way. And VIX probably bounces, with the low cash number, being maybe intraday, it probably will trade in the high 13s again, possibly. The future's not going to come down. Nobody wants to sell it.
Speaking of futures coming down, this is exactly what we saw out there in crude land today, with WTI and Brent both kind of taking it on the chin. Not terribly, but enough to extend the losses into the fourth straight session. I think WTI closing a little bit south of the 44 handle over there on NYMEX. This on the heels of a UAE minister coming out and talking oil going to have a correction in 2016. And when you first see that headline, you think to yourself, what the heck is this guy talking about? And then you read it a little bit more and you realize that he actually means a correction to the prolonged sell-off they've already had out there in crude. So hence a rally, which is a bit odd, even though at the same time he's also saying OPEC won't cut production. So a bit of a weird one. Uncle Mike, you've been watching crude out there, and did this story catch your eye at all? A bit of some confusing double talk coming out of OPEC these days, and pretty much didn't really help oil. It still took it on the chin today.
No, I mean, there's confusing talk out of OPEC. It's kind of become an oxymoron in recent years. But no, I think with oil, it's down with the 44 handle at this stage. I still think it's closer to the bottom than to the top. Or I'm sorry, it is closer to the bottom than it is to the top of where it's going to go. I think we are going to rally over the course of the next couple of years. It's hence the reason that I think the way with which to play it is to just buy a little bit of underlying in XLE or some big oil stocks and sit on it. I don't know when it's going to come back, but I still believe it is going to come back.
Yes, interesting stuff. OVX, of course, the crude VIX out there on USO, taking a little bit of an inhale today, getting back into the 40 handle range. It had been vacillating in the high 30s, so a little bit of vol creeping back into crude. Of course, you've been paying attention to the crude story of late. The sell-off today kind of following on the heels of what we've been saying for a while, indeed, on our long and short of futures options episode. Just went up today, actually recorded last week at FIA, talking about how the skew out there in crude oil options has been kind of interesting. We've mentioned it a lot on our vol views program that bid has been to the puts. And you might expect that in the near term right now, given where we are right now with the pricing. But the farther out you go with those futures and the farther out you go on the curve, the steeper the bid gets to the puts, all the way out to Dece of 2016. People are really concerned still about the downside out there in crude going out as far as a year, which I think may surprise a lot of people who may think this is just a momentary aberration. We've seen the extent of the sell-off out there in crude land, and we're going to be poised for inevitable retracement to the upside sometime in the course of 2016. If you look at the futures and indeed the futures options out there on crude, they're saying exactly the opposite. The concern, the premium, the heft, all to the downside, which is, I think, surprising to a lot of people. You've been watching USO or indeed crude at all, Mr. Rock Lobster, anything lighting it up in the pit chat today regarding the commodities?
We've definitely been watching it. It just, I think I like the idea of some of the peripheral drillers and stuff like that, and unless alternative energy gets miraculously cheaper at some point, they will correct this. Basically right now we just have too much oil coming out of the ground. So I kind of thought the drillers look cheap and stuff like that. We haven't been doing too much directly with USO anymore because it's kind of stuck in a range. It's hard to, I think it's better just to kind of sell puts in some of the producers and, you take the stock and then I think long term you'll make money on it, but you might have a couple of bounces here short term still.
Yeah, it's been an interesting one to watch. And yeah, if you agree with where the big paper is pointing out there in crude land, then apparently the concern, the interest, the premium, the vol, all centered to the downside. Might be a good thing if you're like Uncle Mike, a little bit more of a longer term crude bull. Maybe you want to leg into some upside or some verticals, whatever the case may be. It's going to be a little bit cheaper to do that than you may expect. So keep an eye on that as the crude story continues to unfold. And now, of course, it's that time of the show where we get to unfold some interesting nuggets, including perhaps a little bit of crow for me and the Rock Lobster on one of our odd block candidates. So without further ado, let's do it. Let's dive right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, that funky tune means it's time, once again, for the odd block, the portion of the program where we break down what's moving, what's shaking, what's rocking, what's rolling on the more dubious side of the options market. And like I said, it may be a time for us to lead a little bit of crow here, but we like to point out these ones as well because they're always kind of interesting. Listeners, you may recall a few weeks back, actually, on the 26th of October, I believe, yes, which was our Monday show from exactly 2 weeks ago, we were discussing some interesting, what looked like essentially to be call and stock back spreads for the better part of it, and some, shall we say, dubious candidates. We were talking about Coca-Cola, and we thought, why would you load up on a size premium, size volatility trade in a name like Coke, because that one doesn't really do much of anything. And the other one we kind of mocked was Men's Warehouse. At the time, you'll remember a paper coming in, buying calls, selling stock. The stock was about nearly $40, near about $39 or so. Paper came in lifting nearly 20,000 of the Dees 41 calls for $1.65, and Rock Lobster and I had some fun with that one, saying, really, why would you do this? Why would you buy these calls? And we particularly lit into the stock side of this because we thought if you think the thing's going to move, that's fine. You really want to sell this stock here? It seemed like all kinds of weird way to do it. And, of course, putting on a long vol position in a name like Men's Warehouse hasn't historically been a big driver of volatility. Seemed to be, shall we say, a bit questionable, at least. Well, fast forward exactly 2 weeks. And our friend out here in Men's Warehouse is smiling all the way to the bank. Of course, Men's Warehouse ticker symbol MW, closing today. Remember I said it was trading near $40 when we talked about it 2 weeks ago. If you haven't been watching the Men's Warehouse saga, it hasn't been going too well for them of late. Closing today, $22 even. Cut nearly in half since the last time we talked about it, listeners. This is the name that lately has been doing about 3,500 contracts a day, doing about 23,000 today, and the lion's share of that, listeners, about 20,000 coming in one big close a big FU to myself and the Rock Lobster, our friend, taking his money off the table, laughing all the way to the bank. He was buying back these Dees calls that he, closing out these Dees calls that he picked up back in October and dumping them out for 2 cents. You may say, well, he paid a lot more for them than that. Why is that such a good trade? Well, the stock leg, listener. This is why we always say, and we try to look to find stock components whenever possible, because clearly that changes the underlying component, that changes the outlook for the trade. Buying upside calls is one thing. Buying upside calls with doing it delta neutral, an entirely different beast, because you can see right now how that pays out for you. You can call it the magic of gamma, call it what you will, but this guy rode that stock all the way down, nearly 20 handles at this point before closing out these calls and hopefully closing out his stock as well. A quick back of the napkin calculation shows he picked up about $10 million, so not a bad way to make $10 million in about 2 weeks here. And just goes to show, just because we profile someone buying upside calls and we talk about it, remember, pay attention to those stock components, because it does show a little bit of a different intent, perhaps. And at the end of the day, an interesting thing to watch this long gamma coming in and paying off spectacularly for our friend here in Men's Warehouse. Mr. Rock Lobster, any delicious crow you want to eat here, as we both kind of mocked the stock leg here, and that was indeed what knocked it out of the park for our friend here.
Well, it looked like at the time it was aggressive. Okay. But heck, who knew that Men's Warehouse was going to drop 48% or something like that? So all I can say is at least I found the trade. But it looked like it didn't have much of a shot to make any money. But there again, we appeared to be wrong.
Yes.
That's all I can say.
And of course, if this guy was on the right side of it, he could have done even better. And granted, $10 million is not bad, obviously. There are better ways he could have hit on a downside move, but still, this one worked out pretty well for him. So here we are. We're not too big to admit when our mockery is unjustified here on the Odd Block, and we did openly wonder if perhaps our friend here was onto something. And indeed he was, though not perhaps what you might have thought at first when we first profiled this trade. So there you go, listeners, a quick lesson in how to make about $10 million in a little over 2 weeks. So I think if you want to do that as well, pay attention to the Odd Block going forward. As we move on to our next name, going back, not as much crow to be eaten here. This is just more of a revisiting an old friend who's been popping up on the Odd Block time and again this year. This is the iShares MSCI EFA Index Fund, ticker symbol EFA, closing today $60.30 odd cents. This is the name that does some paper, doing about 60,000 contracts a day, doing nearly 2x, actually over 2x that day, doing 130,000 today. So just lighten it up from an overall paper perspective. And of that 130,000, the lion's share coming in a pretty sizable trade here. What caught our eye this morning was a mega block, a super block, call it what you will. Paper buying 65,000 of these Nove 62 calls for a dime. One block over there on the ARCA. So our friend coming in pretty much closing out some short upside and doing it en masse as the day went on. About 81,000 of these calls going up. That's all on open interest of about 94,000 contracts. So clearly our friend here closing out some short calls, taking advantage of today's dip, the stock off about 1%, to do exactly that. Either way, this is a pretty decent winner for him. So I guess 2 winners in a row here, Mr. Rock Lobster. Didn't see any other legs reestablishing, so no rolls here. It is worthy of note, about 6,000 went up with the Nove 62 halves as well on about 6,000 contracts open. So maybe he split some of his liquidity on both of those strikes and he's closing out those as well. Or perhaps that's unrelated, or some hedging paper from the market makers, what have you. But either way, we didn't really see any reestablishing in any other months. So pretty much 80,000 to go here. And and he got them. all you want, Mr. Rock Lobster, for a dime and more. Just goes to show you when you're coming in to buy some garbage out of the money calls to close, the market will accommodate you. Surprise, surprise.
It's so shocking, right? But I think, from a risk control point of view, the EFA pulled back a lot. I think you got to buy them back at think. You don't have to. Maybe they're covered with stock, but or they kind of aggressively wrote the near the money call. But I think it worked out. Who knows what's against it? Well, all I know is there are calls that looks like they're buying them back for nothing, is what it appears to be. So if you sell calls and buy them back for nothing, generally that's supposed to be a good thing. So it looks like it was a successful trade.
Yeah, and, all the people out there who give us a hard time and we say, hey, close out your shorts, and you say, I don't want to buy back my 10 lot for 3 cents because the commissions are worth more than it is or whatever. This guy doing it 80,000 times. That puts the lie to that mindset. If you got the short, it goes your way. Take it off. Don't sit on it and wait for that final dime. Our friend here doing it nearly 90,000 times. If he can stomach that dime to 8 cents 80, 90,000 times, you can do it. Certainly for a 10 lot or a 20 lot or whatever it is you're working out there. It may hurt a little bit. It may be obnoxious. You may not want to do it. But over the long run, trust us, you will be thankful. And that one time when you close it and the stock just blows against you and you say, oh, man, that could have turned into a huge loser, you will write us and you will thank us for that bit of hard-won wisdom on our part. Trust us. We've all been there. We've all had that moment when we regretted not doing that. And we've learned from that. So learn from our errors. Learn from our shame, listeners, so you too don't have to feel it. As we move on to our final name here, our final victim on the old odd block today. This is going to the medical device side of the fence this time with good old Medtronic PLC. Ticker symbol MDT closing today just south of the 76 handle, about 75, 87 or so, off slightly on the day. But it wasn't the underlying that really caught our eye. His name does about 8,700 contracts a day, doing about nearly 18,000 today, so a little over 2x out there. It was some options love, some options action. Looks like closing, kind of a funky one out here to wrap up the old odd block. What caught our eye initially was 8,000 of the Nove 66 puts going up in the weeklies. Looks like paper buy-in for a nickel. Again, another buy to close here. A total of 8,500 on 8,506 open interest. So guess what, listeners? A bit of closing there. And then we also saw some stock going up, but it was a couple hours later. So it doesn't seem, unless that was a really, really bad print, doesn't seem like that stock is related to that. And then we also saw, at the same time, we saw these Nove puts getting closed out. We also saw what amounted to the DEES, again in the weeklies, the DEES 74.71 put 1x2 going up. Looks like for about a nickel, actually, similar to the old short puts, but a little bit less risky, going for the obvious 1x2 approach rather than just the straight up short put. So, Mr. Rock Lobster, a little bit of a funkier one to close out here, closing out straight up shorts out there in Nove, and then deciding for whatever reason to switch to the 1x2 74.71 put spread, 1,600 by 3,200 times. Walk us through this funky put spread 1x2 closer and / opener here in MDT.
So it looks like, we've had the Democratic debates and whatnot. We're kind of rough on biotech, medical device, all that sort of drug industry, regulate, cut costs, all that. So they had a sell-off. Looks like somebody sold puts, closed them at a good price, and they're trying to sort of do the same thing again. But it's the trade went up about 90 minutes apart. It kind of feels like the same customer, but can't really know for sure on this one. But sort of a similar idea, but not as aggressive, it looks like. So, they're just thinking they're looking to collect some, they're looking for a little downside in MDT is what it looks like. Just not a lot of downside since it's mostly bounced from those levels. So it just, let's just say it's an interesting trade. I don't like doing those trades unless it's a credit. Because the stock does really not much. You don't make any money. So they're definitely looking for a bit more of a push down on it. I'll say that much.
You and your credits. Got to get paid to get your juice, sir.
Well, somebody's got to.
Somebody's got to do it. And that pretty much sums up the odd block for today, listeners. Some surprise winners some funky adjustments / rolls, and just some other straight-up closing of winners out there. So a lot of winners today in the old odd block. We'll see if we can keep the winning streak alive as we transition into that Monday staple. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. Welcome to the strategy block. It's Monday. That means it's time for Uncle Mike to put on his smoking jacket and grab his bubble pipe and some stone tablets and sit down to dispense some options, wit, and or wisdom. Uncle Mike, the pressure is on you, sir. We just highlighted a bunch of winners out there in the old odd block. So we got that winning juice flowing in our veins. Our listeners want to be winners themselves. They want to know how they can win using options. So now I turn the tables over to you, sir. Give them some winning outlook, some winning advice, something to make them also become winners in the options market today. The floor is yours, sir.
You want to be a winner, participate in youth sports today. Everybody's a winner. A lot of times they don't even keep score, so then I guess they're not winners, but everybody gets a trophy. So that's one way to always be a winner for sure.
Well done, sir.
All right. Moving onward into more adult life, I want to go over today the importance of just looking and checking your full portfolio. I'll give a quick update on some things I'm doing a little bit towards the end today, but just something that was kind of weighing on me that I want to go over is just the importance of making sure that you're not duplicating your portfolio, making sure that you're on the right page or on the right strategies to fulfill your plan for whether it's long-term, short-term needs, whatever you're looking to do. So let me give you an example. Let's say that you are a long-term bull, such as myself, and you have a 401k, and let's say that you're probably 90% in some type of stock exposure, whether it's international funds, whether it's growth, whatever the case may be, and you have maybe 10% in bonds and something, maybe short-term bonds because you're concerned about a Fed rate hike, whatever the case may be. But in your more shorter-term portfolio, you're just loaded to the gills with call options. And maybe you have that short-term portfolio within your IRA, and you're doing it just because you're just such a bull that you want to have every little bit of things going in your direction with which you possibly can. But you're looking and you're saying, well, wait a second. If I'm just that bullish, I'm going to blow out my short-term portfolio if we have a market pullback. And on top of that, in my long-term 401k, I'm going to have a pullback in that value as well. What I would say is have it set up to where everything is all working together as one ginormous portfolio. What I mean is let's say within your 401k, perhaps instead of going with a large allocation into your large allocation into stocks, perhaps maybe have a little bit in commodities or maybe even some in cash, something along those lines. Let's say that the only reason with which you even bother with a 401k is because they provide a match or because you need ways with which to shelter your money, and you've already maxed out a traditional IRA, let's say. Whatever you're looking to do. Now, keep in mind, if you already max out a traditional IRA and you're also participating in a 401k, you'll lose your deduction on a traditional IRA, but I digress. Anyway, where I'm going with this is that I want you to really look and see exactly what you're trying to do over the long haul. So let's say, for example, that you look at it and you're like, well, I'm pretty bullish, but maybe I'm not quite that bullish to where I want to have 10 times exposure to the upside based upon all the calls that I have going in my shorter term portfolio. So maybe if that's the case, if you realize that in your shorter term portfolio, you realize that you got a lot of long deltas in that portfolio, perhaps trim some of your positions in your 401k. Maybe go to cash for a little bit. Maybe do something in a shorter term government bond fund, whatever the case may be. And hopefully you don't have too high of fees within your 401k, which if you do, have your HR person call the RCM 401k department. We'll be happy to work with them along those lines to see what we can do, but that's another story. But I want to really emphasize the power of options. I think that if you manage your option portfolio right, in the IRA, let's say you have a smaller IRA and a larger sum in the 401k, you can create a very legitimate long-term portfolio by just using the options if you wanted to go to that extreme on it. So all in all, I think that what you need to do with your short-term trading account along with your 401k account is make sure that they're both working as a team instead of working as two separate things, because ultimately it's your money. So make sure that you're on the same page with both of them. And if you ever need any help doing it, I talk with people on these types of situations on a daily basis. Now, a quick update as to what I'm doing at this stage. In the SPY, we are still positive on the year in SPY. So I'm still long my January 205 call. We are short, or going into today, we were short a November week 2, which is this week, 210 half call. So we ultimately had about 20 to 25 deltas per contract going into the weekend, which is what I felt comfortable with, quite honestly. I was concerned more with a weekend gap down, but instead of a weekend gap down, I got my hour one sell-off, so to speak. So we didn't really have a lot of deltas going into today. So I bought to close. We got into that call for 91 cents. I bought to close earlier today for 30 cents, I believe it was. And so by doing that, I gave myself unlimited upside for the time being, which I'm at right now. I was looking to, my favorite all-time trade would be if I were to buy that call to close in the morning, market rushes back up, sell to open the same call at the same day for like 80 or 90 cents, but we didn't quite get the rally that I had hoped for to do something like that. But nonetheless, for the time being, I am just long the call going overnight, and we'll see what tomorrow brings. Should we go up significantly, I would like to sell some calls on this rally, but if that's the case, I'm going to be hesitant to sell the actual call itself. I might end up just going with like a put calendar to trim some deltas off the table that way. Don't know at this point what tomorrow holds, but I can hardly wait because the excitement is going to be there, that's for sure. And that's what's going on in the world of Tucson Strategery in St. Charles, Illinois.
Well said, sir, and Uncle Mike will fill you in shortly, as he has many times, if you want to reach out to him to figure out how can we get to work together on combining or making our IRAs work in conjunction with your trading accounts and all the other fun stuff that you can do. Using them, their options, it should make you feel happy, Uncle Mike. It seems like all the looming prohibitions against IRAs using options probably will be mitigated or erased coming in Q1 of 2016. So all the lingering fear about, oh no, will advisors even be able to use options in IRAs anymore? Seems like that won't happen. So that's a good thing. If you want to know more about that, listeners, of course, check out our advisors option program that we do with the OCC as well as the Swan Global folks over there to talk about a lot of the interesting developments in the world of asset management and financial advisors that are interesting from an options perspective and certainly can be interesting to you if you guys are looking for a financial advisor out there. All right. And since we have a little bit of time on the old program today, and now we'll turn our attention to you guys because it's time for a little extra mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know the drill. This is the portion of the show where you guys usually on Thursday and once in a while on Monday get a chance to join us here on the old All-Star panel. Send us your questions, your comments, your insights for us as well as for your fellow listeners. No shortage of ways to do just that. Surf on over to the mothership, the flagship, theoptionsinsider.com. Post a comment or use the feedback form, and that'll get to us here on the old program. Of course, just add options on Twitter, probably the easiest way. A lot of people like to use that out there. Reach out to us there. A lot of you following us along on Twitter. We, of course, put out the show links there. You can actually stream it live through Twitter and things. So if you want to follow us on Twitter, get all the updates and the show links and everything else like that. Easy to do right there. Add options. Hard to forget that handle. Of course, the Options Insider on Facebook, Options Insider on Stock Twits, as well as just questions at theoptionsinsider.com. So you guys can figure out the means that works best for you. Of course, most of that is baked into the mobile apps as well, depending on the version and the platform. Some have more than others, but most of it's baked into most of them. So you should be able to find your way to us, just like our first questioner here. This comes from 777. Maybe he's a extra Bond fan. I don't know. Or he just likes the number 7, lucky number 7. He writes, hey, what quirks are there with time decay during the last few weeks with in the money versus out of the money options. Mr. Rocklops, I know this is a thing that you and Mark have worked on a bit over there at Option Pit in the past. I think it was Mark and might have been Russell actually, who were doing some interesting papers showing, because there's that conventional wisdom around options and the way they decay, and I think we're kind of all guilty of this. We've probably all done a presentation at one time in our lives, and we've shown that that exponential portion of the decay curve and how that kicks in the final month, indeed the final few weeks of an options lifespan. That's where you want to really play from an capturing decay, income generation, premium harvesting, call it what you will, perspective. But that primarily is fixated around at the money, and that's the way the at the money tends to perform. And as a lot of our listeners, I'm sure, have discovered, and we can see them, the email and the questions you sent in, hey, I wrote this and it's not decaying the way I thought, or why isn't the spread lining up the way I thought? You can see that there are indeed some quirks with the way the out-of-the-money stuff in particular tends to perform from a decay perspective. Again, another one of the reasons why we counsel, like our friend today, buying back 80,000+ of those cheapy upside calls. The reason he's doing that is because he knows that it's going to take him a while to get that final dime to come in. And in the meantime, he's going to put himself into substantial risk from waiting for that decay perspective, which is why so many of the brokers we like to recommend as well also incentivize you to close them out, particularly when it gets south of the nickel handle, nickel or less. Some will do a dime or less. Most will nickel or less. They'll make that free because that's just risk that is there for absolutely no reason at all. Because, again, that final dime and certainly that final nickel, that's a dangerous road to hoe if you sold it for $1 or 40 cents or whatever. And now it's making it all the way down to, I like that dime threshold. Maybe Mike and maybe Andrew, you guys have a different threshold. Once I see it south of a dime, I start looking to close things out. Maybe we'll start with you, Mr. Rock Lobster. Hey, what is your usual threshold? When do you like to get it back? I think a dime is a good one, but maybe you like 30 cents. I don't know. Maybe you're crazy over there in Maine. And then also, what do you have to say for our friend here, Mr. or perhaps Mrs. 777, who wants to get some of the quirkiness of in the money versus at the money versus out of the money decay?
Well, one thing is the out-of-the-money options mostly decay 30 days and out. So once you're 30 days in, you got what we call the insurance effect, which means mostly that the options decay, but they're going to do it real slower because liquidity providers don't like having that. Basically, for a liquidity provider to sell all that out-of-the-money junk, it's margin heavy for them. They're short a lot of contracts. It gets really messy for them, so they don't like to sell them. Thusly, they don't go to zero. Even though theoretically you're like, oh, they should go to zero. Well, what the model never takes into account is you have to hold a position till the very last minute, and all that accounts for risk control. So that's what makes that difficult. So you're not going to get that kind of decay. So those out-of-the-money options decay, pretty rapidly. With the weeklies, we have expiration every week now. So you do have a lot of, I'll just call it high-value decay, from Thursday, Friday of the week before expiration. Then you have like Monday, Tuesday. Normally we're looking to close stuff by Wednesday of the week of expiration because the gamma gets a little too nutty after that. So for near-the-money options, that last, not holding that till the very last minute, then becomes more of a pin play than just trying to sell the options. The model doesn't work that as well really close in, which is why they have to jack the vol up. The last part I would say is if you're going to sell options, you also want to sell options where you think the implied volatility is starting to drop because that gets you the actual action you want. Just waiting for time decay, especially if like today, a day like today when the VIX rallies a little bit, volatility rallies, it tends to arrest the decay. Like, why didn't I make any money? Well, as long as implied volatility is going up, you're not going to get a lot of money from decaying options. So when you are expecting time decay, you are also making an implicit bet on implied volatility, whether you think you are or not. So those, I would say, are some of the more obvious quirky quirks of time decay during the last weeks of options.
And are you in that sub-dime threshold as well for closing?
Yeah, that's certainly a good place to close an option.
Or maybe the old days, 12.5 cents getting back.
Exactly, an eighth. Yes.
And Uncle Mike, what do you have to add to our friend here, Mr. 777, and where do you fall on that closing out threshold?
Closeout threshold, generally 80. When I can get 80% of my intended profit is when I like to close out. Typically, my threshold is probably around the 20 cent area. But if I have an opportunity or what I deem as an opportunity, I really have no qualms about closing out sooner. For today, for example, I'll tell you exactly my thought process as to why I closed out when I did today, and this will also be a pretty good lesson to add to this. I sold the option on Friday for 91 cents, the 210 half call on SPY. And today, after that huge drop in the first hour and a couple hours of the day, got down to where I could get out of that option for 30 cents. And so normally, in theory, my 20% threshold should be 18 cents. But I looked at it and I looked and saw, okay, well, in my estimation, we're going to have to drop another 10 to 12 points for me to get to that threshold. And so I'm thinking, okay, we dropped this quickly. I'm just going to get out right now at the 30 cents because of the fact that it's dropped so quickly, and I've made 66% approximately of my gold profit in one night. And I would have to wait. Let's say the market were to stay still, I would have to wait probably another 3, possibly even 4 more days, probably 3 more days. I could probably get out of it. But let's assume the market stayed still and I wanted to wait for the time decay for that remaining 12 cents on that 30-cent option. I don't like doing that. I took on the bet today that the market would come back up. And in the market coming back up, there'd be another opportunity to sell another option for potential to make more than that 12 cents approximately over the course of the next 3 days. So that's why I got out of it today, as I did. Now, let's talk about this. And Andrew mentioned that whenever you're buying an option or selling an option, that you're making an implicit bet on implied volatility. You may not think you are, but you are. Let's take a look at just a case study in the real world for me today. I got out of that option this morning when SPY was trading probably around 207.33 approximately. 207.30. I'm just trying to look at the chart. Let's just say 207.30. And I got out of the option, the 210 half call option, for 30 cents. Now, SPY has rallied approximately 80 cents since that event has occurred. And I'm looking at it in a quote right now. That option is trading at 30 cents by 33 cents. So with all that's happened, with us rallying about 8 points in the S&P from when I got out of that call option, why didn't that call go anywhere? We haven't had any time decay during the day. Well, right there, we actually have had a drop in implied volatility since at least in that specific option, since the time with which I got out of it. So when you're doing something, just to add to what Andrew had said, have an understanding of what the volatility actually would be. Now, if we'd have rallied up to 210 or something like that, where the market closed on Friday, and I could have gotten back in for what I got in at or close to it on Monday, hey, great. That's my dream trade of all time. But in reality, what I was looking to do throughout the day, which I did not find, was hopefully an opportunity maybe with like a 209 half call or something in the next week or something along those lines. It didn't happen today. But that's what I was looking to do, and I think that when you're exiting an option position or just having that understanding, it's very important because volatility is a huge factor.
There you go, listeners. Everything can turn into a teaching moment here on the old option block, but now we have to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, a lot of stuff coming down the pike here on the old docket for this week. Some earnings still kind of winding down in earnings season. We're getting to the retailers. We start getting to the retailers. It's kind of the tail end of the big names, at least. We got Macy's coming out on Wednesday. We've also got Penney coming out this week as well. Later on this week, Thursday, we got some tech names, AMAT, Cisco, and Kohl's, a few others, Viacom as well, JCPenney wrapping it up there on Friday. Also got some data on the horizon, as if last week's non-farms wasn't enough. The data stream keeps on going. We've got jobless claims on the 12th, as well as PPI and consumer sentiment and retail sales all there on the 13th. So if the Fed needs any more ammunition in its quiver, it may get it or may not this week. So we shall see. And also to round it out on the macro sense, Singles Day coming up in Wednesday on China, that weird holiday we can't really grasp here in the West, kind of like an anti-Valentine's Day, I suppose you can call it. That also tends to drive a lot of activity in some weird areas, so we'll see what that has in store for us. A lot of stuff cooking. Now we turn our attention to the Rock Lobster. What are you looking at for the rest of this week and into our next episode, sir?
I would like to see if we bounce from here or kind of stay sideways. I'm kind of thinking we're kind of sideways, up a little, down a little. There's not a lot of news. We have the holidays coming, and I think the market's still a little touchy. The fact that we kind of almost made those, almost got back to the all-time high level, but VIX really hadn't been able to settle down. Just goes to show you that's where we're. That's where we are. I think the market it's looking for a reason to sell off, as far as I can tell. That's what it feels like.
I know you have to run, so what's coming down the pike in the land of the pit, as well as your other myriad ventures, including your ice skating rink?
Well, the rink, I will just let you know when the rink is done. But besides that, we're going to have a Fixing Broken Trade webinar coming up very soon. Our vol webinar was great this weekend. And we will let you know when that next one is coming. And we're going to have a winter boot camp for all those who, for the holidays, right before Christmas time, the perfect gift for that option lover in your house.
There you go. Infringing on my trademark again. My lawyers will not be happy. Get off my show, sir. I'm done with you.
I will leave right now.
All right. You do that while we turn our attention to much closer to home, to St. Charles. Uncle Mike, since he already did it, we'll let you do it too. First off, what's catching your eye for the week to come? Then tell us what's cooking in the land of good old M. Tusaw.
The land of good old M. Tucson. Oh, what's catching my eye this week on SPY is this 208 mark. I think this is kind of a key number for if we can hold it. That will be, I think this is going to be a key level of support right now. We're at it right now, and it's on SPY. So that's probably what I'm laser focused on at this point. Curious to see what actually does drive the market, what can drive the market up going into this kind of dead period with which we have over the course of the next few weeks. In terms of what is catching or what is going on in the land of M. Tusaw, still, if you are looking to be a self-directed trader, which most of our audience is, I'm sure, and you are looking to potentially save some money on commissions and have the, as I like to put it, the phone a friend feature. Hopefully ABC doesn't sue me for saying what I just said. Feel free to contact me, and perhaps you can trade through our umbrella at either TD Ameritrade and or Interactive Brokers. We do get a reduced commission because of the size that RCM is, and we do charge a small fee for it. But with that fee, oftentimes it still works out better than the commission rate you're paying at the current time frame, and you get to contact myself for advice on trades. If that's something with which you are interested in, feel free to contact me at 312-212-3531, or feel free to send me an email at mtosaw@rcmfs.com.
All right, listeners, that music means we've come to the end of yet another fun edition of the Option Block. We took a nice detour into the land of some weird and wild and woolly activity in the boot camp. Took some interesting detours into the strategy, education realm as well, and we wrapped it all up with a nice bow here in the old Around the Block. Want to make sure you guys, if you're not doing so already, check us out on Twitter. We're just at Options on Twitter. We have a lot of great content out there for you guys throughout the day, not just on show day. There are, of course, show links there as well, but unusual activity links, links to articles, all sorts of fun stuff. If you haven't done so already, make sure to subscribe to our weekly newsletter. It comes out at the end of every week, usually on Sunday. Kind of a quiet period for newsletters here. Your inbox isn't too full, catching up on some of the best stuff from the week, some of the great data, articles, analysis we've done over there on the website. Sign up for that if you haven't done so already, and follow us on all the other outlets, Stock Twits, Facebook, etc., etc. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. Keep them coming. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.